There is more. Now, be it online shopping, paying at your favorite local stores at a POS terminal, or you're grabbing cash from the nearest ATM, Verve is the game changer. The simplifies. So, how do I pronounce your name? Chidaalu Nkwocha.
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 Yes.
Nkwocha. All right. Verve logo. Have be your partner. Financial exploration. Verve. Enjoy the good life. Hi, Lagos. My name is Chief. Live on YouTube, and we're about to go on radio.
Okay.
With critical focus on the Nigerian economy, we see the bigger picture. Business Express on Smooth 98.1. Business Express, brought to you by EnterSwitch, transaction solutions you can depend on.
Love music, love life. You are listening to Smooth Breakfast right here on Smooth 98.1. And now is the time for Business Express. Welcome to join us. You can send your messages via WhatsApp line, which is 0809 444 0981. Again, 0809 444 0981. While the YouTube channel that you can subscribe to that allows you to be a part of the conversation as well by using the live chat option. That is at Smooth 981 FM Lagos. It also means that you can join us from anywhere in the world and also watch it later on at your time of convenience. And so this morning we're talking about Dangote Cement 2024 earnings performance. It looks like we have the data being rolled out these days, and we need to understand why and maybe how to increase them. And so talking about Dangote Cement 2024 earnings performance today, please join me, analyst at Afrinvest Research and Consulting. That is Chidaalu Nkwocha. Good morning.
Good morning, Sheon. Good morning to all listeners all over the world. Hope you're having an amazing start of the week.
Yes, thank you for joining me, Chidaalu. So let's get right into the discussion and start with what you make of the revenue performance of Dangote Cement in 2024.
Okay, so Dangote Cement's revenue performance for 2024 was quite remarkable. I mean, we saw a 62% performance against the prior year, which was a significant momentum. So when you look at the performance and across the group, you kind of like see that what contributed was the sales volume, which went up 1.8% as against the 1.6%, minus 1.6% in 2023 in the prior year, and price also went up by 59%. And the key driver for the surge in revenue was the Nigerian market, and it accounts for over 60% of the total sales of the cement group.
Are you there?
Yeah, I'm here.
Oh, okay. All right. So wanted to be sure that it was not the internet when you were done. All right. Thank you. So now let's dig a little bit deeper into that revenue by segment, because you did say something about the Nigerian market being responsible for that, because Nigerian domestic sales amounted to 2 trillion naira. That's 64% growth. Well, compared to the Pan-Africa income, that is 1.3 trillion naira. That's 56% growth. So what can be said about the company's revenue from the diversification across Africa?
Nigeria remains the backbone of Dangote cement operation, and like I earlier mentioned, it accounts for over 60% of the bulk of the sales in the Dangote cement industry. But what's really interesting is that it's 56% growth in the Pan-African revenues. It's quite impressive, and it's a step from the 2023. So in 2023, the Nigerian market in particular was sort of like down. So because of the uncertainty of the election here, that was when the market was not really favorable. We had the cash crunch, we had the election year. So Nigerian market was in 2024 was coming from a recovery of that 2023. But then in 2023, the Pan-African market supported the Dangote Cement Group. I mean, it contributed to a large extent to the Dangote Cement Group. So it's actually good that they diversified across Africa. So it's also sort of like a backbone, like a rebound plan. So if the Nigerian market is not currently doing well, at least there's hope that, okay, yes, the Pan-African market is there to like support it. Because we all know in Nigeria, nothing is certain. You can get up in the morning and something just change and it can actually like affect the market. So yeah.
Wise business decision. And talking about that diversification, they plan to put in or sink in $400 million in Ethiopia operations. What do you make of that?
It's actually a smart move if you ask me, because if you take the top 10 countries that Dangote currently have like their distribution houses in, Ethiopia is not, it's top four and it's not even number four. If that's how I'm supposed to put it, it's top four. So Ethiopia has a high growth market. I mean, their GDP is over 7% as of last year, and the country has one of Africa's fastest growing population, and its expanding infrastructure sector is an attractive avenue for the cement market. So it's really a smart move given the fact that they are having like a high GDP and it grows like steadily.
Thank you for helping us understand why Ethiopia. Now let's talk about cost, because even as much as the revenue rose by 62%, cost of sales rose by 63.54% and other things, including fuel and power. So can you speak to the largest cost element for the company?
Okay, yeah, okay. So the increase in revenue was very impressive. We can all attest to that. I mean, the number speaks for itself. But then it's nearly equals rise to the cost of sales, which was 63.5%. So it raises concerns about profitability. So there are certain sectors that I would say like drove this cost of sales, fuel and power. So Dangote cement relies heavily on energy and global energy price volatility last year cost like one of the reason why the cost went higher. And I mean, even us as Nigerians, there was a time where fuel prices were going up and they're going down. So that's like one of the main reasons why, okay, their cost went higher. And also materials that were used. So the cost of key materials like, let's say, limestone, clinker has also increased due to like the currency depreciation. I mean, last year we noticed how the naira devalued seriously. I mean, it got to a point that we thought it was going to reach like 2,000 naira per dollar. So when you check certain things like this, they were part of the reasons why the costs went up. But yeah.
Still about the costs, you help us understand the finance costs. What's going on? It went to as high as 125%. What's the company facing there?
Okay. Yeah, the finance cost went, I mean, it outpaces like the revenue growth over 125%. So, but last year they nearly doubled. So the main reason why it could have been is the currency devaluation. Like I mentioned, Naira devalued last year significantly. Then also the higher interest rates. So, I mean, the central bank was also trying to, in their bid to like help the inflation policy, they were increasing rates too. So when they increase rates like banks and they have to go and borrow from banks, it makes it sort of like tighten like the borrowing aspects, or should I say community, making it tougher for the business. So that should be what also like cause like the finance costs like rise over 125%.
Let's zoom out a little now from Dangote and look at the wider construction sector. It grew by just 1.14% compared to 2023, where we had 3.57%. Do you think you can do better in 2025? Plus, I think you have explained that the devaluation and other things probably contributed to that low growth. But can we do better in 2025? And what do we need to do better?
Yeah, we can definitely do better in 2025. I mean, they say never say never. So the government is putting in key infrastructural projects. And when you talk about infrastructure, you will need things like cement to go, especially in, let's say for now, that most times that the cement market really like boost their revenue should be like the first 2 quarters when that's like the dry season. And if you notice, the government is also commissioning a lot of projects where I think they are beginning to build like railway stations. They're beginning to build railway stations, and also private sectors. So a lot of people are going into real estate. like the real estate market rebound, it's increasing the private sector demand. So yes, the revenue is going to do better because a lot of people are trying to like build their houses, and the increasing population too also speaks for itself too. With the population increasing rapidly, obviously it's normal that okay, you have to look for houses. Nobody wants to be like homeless. So the prices of the sector is going to do better. If you look at all those factors, yeah, the sector is going to do better in 2025.
So you think that's enough to sustain the industry sector players like Dangote, Lafarge, Boa, and the likes?
Yeah, so far as government boosts their infrastructure spending as part of its economic stimulus, which they are trying to do now, and then hopefully, if interest rates are even lower, if interest rates are being lowered, like let's say in the next MPC meeting, we are not sure of that yet. But given the fact that the rebased inflation figures came in lower, and they kept interest rates at status quo. So if the inflation should keep going down lower, they'll obviously reduce interest rates, and it's going to be favorable for businesses too. So yeah, it's going to, yeah, there's a possible recovery this 2025. It's going to
Mm.
be
Well, on a
better.
final note, for those who are looking to put their money somewhere, are stocks in the sector worth looking at as part of wider balanced portfolio?
Okay, yeah. So for there's a strong demand for fundamentals, that's urbanization, infrastructure growth, and market leaders like Dangote Cement have strong pricing power. I mean, their price went up last year significantly if you check the financials. So, and also dividend yields are also very attractive compared to like other sectors too. So for a balanced portfolio, the cement sectors, they can obviously provide like good exposure to Africa's infrastructure good, but yeah, it's a stock you should have like for long-term growth, like in the long run, it's a stock you should have on your portfolio because the demand for cement will increase over time. I mean, we're going to see it reflect over time. So it's a stock I would recommend that yes, you have on your portfolio.
I like your disclaimer, long term.
Yeah, long term, it's good to put this, but if you're looking for short term, no, but long term wise, yes, it's advisable. You should have it on your portfolio. It's definitely going to like increase. And with Dangote having the good role that he has a very good name too. And they are very good at like expanding, like they're already expanding again in Ethiopia that has a very good GDP standing. So it's also good to like have it on your portfolio.
Thank you very much, Chidaalu, for enlightening us this morning and sharing why, at least when we see the numbers, we now understand better why the number. And fingers crossed as we hope for more growth and increase generally in that sector. It's been lovely having you this morning, and I look forward to having you back again on one of these days. Do you have a social media handle you'd like to share with us?
Yeah, on LinkedIn, you can find me at maybe Stella Nkwocha.
All right, thank you. And thank you for joining us on Business Express this morning. You can find the replay on YouTube at Smooth 91 FM Lagos, at Smooth 91 FM Lagos. Do join us at 7:30 for Freshly Pressed. My name is Oluwaseun Olusegun.
Thank you. Bye.
Thank you. How was that?
Mm,
You were not as
I do
nervous.
better. It wasn't that bad. I think